A guy named Marcus opened a secured credit card in 2014 with a $127 deposit. He had a 740 credit score at the time. He deliberately tanked it. His financial advisor told him to. 3 years later, Marcus had leverage that moved into owning 4 rental properties with almost none of his own money in the deal. That $127 deposit was not a last resort. It was the opening move in a game most people never get taught. Here's what nobody tells you. The credit system was not built for you to win slowly. It was built for banks to win consistently. And the people who actually break into real wealth? They figured out how to use the system's own rules as a weapon. Not against the banks, against their own previous financial identity. That distinction matters enormously, and it changes everything about how you should think about debt, credit, and leverage. Let me explain what actually happened with Marcus. In 2014, he was making $62,000 a year. Decent income, decent credit, but every bank he approached for a small business loan looked at his profile and saw an employee. Someone who borrows money to consume things. A car loan here, a credit card balance there. His credit history told a story. And the story said this person uses credit to buy stuff they cannot afford yet. That is a consumer credit profile. And consumer credit profiles get consumer credit terms. High interest, low limits, maximum scrutiny. His advisor told him something that sounds insane until you understand it. We need to erase who you've been and build who you want to be. That process started with a strategic reset using a secured card. $127 deposited. Card opened. Then Marcus used it in a very specific way for 11 months. He charged exactly one recurring bill to it each month. Paid it in full. Always on time. Never more than 9% utilization. He was not building credit history. He was building a credit narrative. A story that would look completely different to a commercial lender than his old profile did. If this kind of thing surprises you, subscribe right now. This channel covers what financial media gets paid to ignore. New video every week. Here is the second layer that makes this genuinely powerful. There are 2 completely different credit worlds that most people do not know exist simultaneously. There is consumer credit and there is commercial credit. Your personal FICO score lives in the consumer world. Business credit, the kind that gets you $100,000 lines with no personal guarantee, lives in a completely different reporting system. Dun & Bradstreet, Paydex scores, SBSS scores. These systems barely talk to each other. And a low or thin consumer profile can actually be an advantage when building commercial credit from scratch because commercial lenders are not looking for the same signals consumer lenders are. Marcus's advisor knew this. The secured card was not about the card. It was about the 11-month timeline it created. That specific window was enough to establish what commercial lenders call a seasoned primary account. When Marcus applied for a business line of credit in 2015, he showed them a clean, intentional credit profile with no noise from old consumer patterns. No retail card opened in college. No medical collection from 2011. The reset had worked. He got a $45,000 business line of credit at a rate reserved for established businesses. He used that to put a down payment on his first duplex. The tenant paid the mortgage. He saved the cash flow. Repeated it 3 times in 2 years. Now here is the practical part. What can you actually do with this? Step 1. Understand that your current credit profile tells a story. Pull your report tonight at annualcreditreport.com. Look at it like a lender would. Not at the score, at the narrative. What does your history say about why you borrow money? If it says consumer purchases, that is the problem to solve. Step 2. If your profile is thin or damaged, a secured card with a deposit between $100 and $150 is not a step backward. Used correctly, it is a rebuilding tool. 1 card, 1 recurring charge, under 10% utilization, full payment every month. Set a calendar reminder for 11 months from now. Step 3. While you are doing that, start building your business credit profile in parallel. Register an LLC. Get an EIN from the IRS website, it is free. Open a business checking account. Apply for a business card from a store like Uline or Grainger that reports to Dun & Bradstreet without requiring a personal credit check. Pay it immediately. Every single time. You are creating a second financial identity that the consumer credit world cannot touch and cannot taint. Step 4. After 12 to 18 months of parallel building, you will have two things most people never have simultaneously: a clean consumer profile and a seasoned business credit file. At that point, the doors that were closed before opened differently. Not because you earned your way into the system, but because you built yourself a new key. Here is the thing that should genuinely bother you. This is not secret information. Financial advisors who work with high net worth clients teach this in their first meeting. It is not hidden in some offshore manual. It is hiding in plain sight behind a system that profits from you not knowing it. The banks make more money from a confused consumer with a revolving balance than they ever will from a disciplined business owner with a clean line of credit. Marcus made his $127 deposit on a Tuesday afternoon at a credit union in Atlanta. Within 4 years he had replaced his salary entirely with rental income. The deposit was not magic. The knowledge behind it was. Do not close this video yet, because the next thing we cover is the exact order of operations that commercial lenders want to see and almost nobody presents correctly. If you miss that sequence, you can do everything else right and still get denied. Stay right here.